Nimesh Shah has gone over there and is speaking to a lot of investors. So he joins in now with the key highlights of the conference. Nimesh.
Into the third day of the Credit Suisse conference, the key highlight so far, meeting a lot of the investors is, one, of course, there is plenty of risk to the global economy in 2016. Within Asia, China seems to be the biggest risk, but right now, India seems to be in a sweet spot. Most of the investors seems to be over India at this point in time. Also, the fact that not only RBI cut rates by 25 basis points yesterday, but also improved the liquidity into the system. That's gone down really well with most global investors. They feel that's a long-term positive for India, and from here on, they will look at possibly increasing exposure into bank stocks as well in India. So that's a big key takeaway that I've picked up from most of the global investors. However, the key risk for emerging market equities in 2016 would be what's the tone of Fed, whether they continue to be hawkish. So that's something to watch out for. And what's the data coming in from China. These are the two biggest things to watch out for. If the tone continues to be hawkish and the China data improves, the sweet spot for EM will continue, and the biggest beneficiary of that will possibly be India. Not only that, most of the investors whom I spoke to are very confident that India will continue the path of reforms, and if that continues, they seems to be looking at increasing exposure into India. So right now, while India is an overweight market, there is an intention of further increasing exposure into India if the reform continues, and there are no bigger shocks from the global market. So right now, India seems to be in a sweet spot. Can the EM sweet spot continue? That will depend upon what the China does and what Fed does. But it looks like for now, India is a flavored market, and most of the investors seems to be overweight India at this point in time.
All right, Nimesh, thanks a lot for that. So that's Nimesh.